traders. Nick Shaheen here, looking at levels and how how I use levels to try to beat the market makers, the big money, the people behind the curtain. So today, 8-9, Apple markets opened okay and then fell off a cliff on a tweet or a TV appearance by the president, where he said something about Huawei, blah 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 blah. Apple fell off a cliff, and this is how I use levels instead of ticks. The point of this video: separate your mind from levels and ticks. If I watch ticks, I will make mistakes because my emotions take hold and control my actions. If I watch the chart and know the levels, and I watch the levels, not the ticks, then I make better decisions. Perfect example. This is Apple. Right now it's down 0.6, but it was down 1.6 earlier, or 1.5 at least. So let me show you exactly what I'm talking about. Okay, this is a 5-minute chart on Apple. Same chart. Okay, different platform. So I'm going to mark it up. So this was the open. This was yesterday, by the way. The low, somebody sold Apple down here at 199, and look what they missed out on. The high overnight, and then we opened okay. We opened here, we opened and fell, and then clearly to here. Technically, when this happens, odds are it's a bullish day, not a day to short. When the first 5 minutes, I learned that recently. So I shouldn't say odds are, statistically probably that's incorrect, but I wouldn't short the day yet. So then somewhere around here, somebody said something and then fell out of it. So my point, if I was watching these red, and if I was happy here and I bought Apple stock or Apple calls or shorted a put spread in Apple, which is also bullish, and then I see this, I start getting worried. Then I see this and like, whew. And then I see this big red one. I was like, oh my God, I start sweating. And then, okay, good. They're bouncing at the same place. And then the trap door opens. And then, oh my God, the news, CNBC, markets are taking a tumble, blah, blah, blah. And then I suddenly find myself, you know what? Forget it. I'm down 30% on my calls. I'm out. They sell the calls. That's what somebody who's watching ticks would do. Somebody who was watching the same chart but knows levels would say to themselves, hey, bad day, not ideal what I did, but let me see what's going on here. And then I look left. And I say, you know what? Apple may be headed to retest the prior day low. And sure enough, it hit that zone, and boom, look at this big bounce. I don't think anything happened here headline-wise. Nobody said anything about a deal anywhere. In fact, Trump said, not working with whatever, no deal, blah, blah, blah. So this is market makers messing with us one way or another. And look where it came back. So it got back to here. Same two people, the person that sold and the person that said, no, I'm not going to sell. The person that sold starts seeing these green ticks. Oh my God. Oh my gosh, I missed out. Damn it, I made a mistake. They rebuy. Maybe here or here. Why? Because this was the value area high of the day. And then they say, if it goes above this, I'm going. And then they go long. And then now the other person would say, whoa, sweet. Glad I didn't get out. Let's see what happens here, because this was the last failure point. So this is where I wait for a breach before I chase. Maybe breach of retest, and then this. So this is the difference between watching it. I'm not saying one person is smarter than the other. One person is watching ticks and reacting emotionally. The other person is watching the same ticks, but more concentrating on the levels and then acting about. Different people draw levels differently, but I can guarantee you that I make fewer mistakes when I know levels and I have conviction in them, one way or another. It's not like I picked one tick here or there. I picked the absolute low of the day, and it was on good size. So, and here I picked the absolute high of the day, and it's on big size. Sure, I noticed this level and I noticed that level, but I wouldn't chase. In fact, I went long the SPX here. I was in a chat room with friends and I mentioned going long the SPX here. And it was immediate payout, because as soon as we went long, this happened. Not saying I'm smarter than the average bear, I'm not. I'm just saying that when I stopped watching ticks, I made fewer mistakes. And if I'm an active trader, then I have to know levels So levels over ticks, that's the point of this video. Not Apple specifically, not trades today specifically. This lesson goes everywhere. Levels. In fact, let me see here. Okay, this is the S&P. Before the market opened, I drew these two blue lines. And I said, I'm watching this blue line and that blue line. That was before the open. Then the market opened. Where is it? 8, 9, somewhere around here. And then the action took us lower. So now the question is, are we going to finish the job here, or are we going to break out from there? So there's nothing to be done. If I'm long or short or whatever I'm at, there's nothing to be done today. I'm watching these fools go up and down inside the day trade and causing all kinds of havocs on TV. The levels are still the same. I don't have to do anything. All right. Nick signing out.